Hi guys, welcome back to the artoftrading.net. This is Trader Stu with you here. I'm gonna make you guys another video of two trades that we did on Friday. Um, we only did two trades on Friday, but I'm basically gonna walk you guys through them and talk exactly on how what I saw in these trades and why I decided to issue a trade alerts on these two stocks right here. So basically, bottom line, quickly. The market on Friday gapped down pretty good. There was some global news going on, and obviously right now there's a lot of global events happening, and unfortunately, not so good news been hitting the news wires lately, and obviously stocks have been reacting on the open, to these kind of news events. And in general, whenever you see negative news in the market, obviously the market is more than likely to gap lower at the open. But basically, the first stock that caught my eyes near the open. First of all, coming into Friday, let me just talk about this real quick. Coming into Friday, I was expecting the market to open weaker, obviously, because the S&P futures were pointing to a lower open. However, I was fairly confident that the S&P and other indices will rebound later on in the session, and I actually mentioned this to my subscribers and also mentioned it on Twitter several times. To expect a bounce, later on in Friday's session. And indeed, thankfully, it did happen. But basically, I mean, the reason why I was thinking that, I'll talk about it in another video some other time. But basically, we were approaching very, very oversold levels in the market, and as well as we're approaching very oversold levels very quickly as we approach support, and you can see that some pessimism was starting to affect a lot of traders, and you can see that maybe a bounce was in the making at that point. But basically Friday, I used the gap down as an opportunity to get long, fully expecting a rebound later on in the session. So I used Friday's week open to get long. One of the stock right here was NOG, symbols NOG, NOG, which is an oil stock, oil and gas operation stock. And as you can see here, the stock has been in a nice steady uptrend over the last few months. And it has a one thing I really like about this stock is that it has a good history of testing the 50-day moving average and then bouncing. So you can see here it did it once here, back in November, rallied quite a bit for quite a long time actually, and then came back down several days in a row. So the stock loves to rally and then come down several days in a row, test the 50 moving average or test the trend line, and then bounce right back up. So as you can see here, the stock, here back in November, October, November, rallied quite nicely, and it fell down, as you can see here, several days in a row, tested the 50-day moving average, and then rallied back up again. Did the same thing here, rallied for quite a long time actually on this turn, fell down several days in a row. Actually, here broke the 50-day moving average and a rebound, but the very next day, guys, it rebounded right back above the 50-day moving average. So right away, this was a buying opportunity. As soon as it broke back right above the 50-day moving average, technically this would be a buy. If this was a stock I was watching back then, I would look to enter the stock somewhere around right here, with a stop, maybe right underneath this candle right here. And as you can see here, the stock rallied again, tested the 50 moving average again, rallied, and look at that, guys, fell several days in a row, tested the 50-day, and then rallied back up again. And guess what? Here we go again with another opportunity. The stock fell down 1, 2, 3, 4 days, and on Friday's gap down. That was the fifth days in a row. It gapped on a down fifth down day for this stock. But this time, what made this decline interesting is because it was testing this uptrend line right here, and as well as the 50-day moving average, as well as an area of support right around right here, guys. As you can see, this stock loves to test support. It loves to rally, but it loves to test support. So this is the kind of stock I would urge not to chase it. You don't want to be chasing a stock like this on the way up. You want to be maybe buying it as it tests support lines, as it tests moving average lines. So basically, this was what I saw on a daily chart. As you can see here, it gapped down below the 50-day moving average. It overshot by a little bit, but like I said, I was expecting a bounce in the market. So right away, I zoomed into the 5-minute chart, and this is what I saw right here. As you can see here, so this is the 5-minute chart in the stock NOG. Thursday's close was right here around the 28 level, gap down hard really quickly, and then quickly fell all the way down to 27.25. And as you can see, guys, the stock quickly started reversing. So this right away caught my attention because now we have a gap down open, a hard sell-off, which probably anybody who bought the stock here on on Thursday as it tested the 50-day moving average, anybody who bought it right here on this candle as I tested the 50 moving average, chances are they got stopped out right here at the open the very next day. So once you see that, once you see stop losses being taken out, guys, this should not be a reason you should be scared of a stock. You should be gravitating towards a stock right away because once all these stop losses are cleared, the stock is now free to do what everyone was what everyone was originally thinking was going to do. So everyone who thought was going to bounce off the 50-day moving average on Thursday, if they bought right here and their stop losses are right here on the 28, 27.90, 27.80, guess what? They were all taken out. The stock went all the way into 27.25. So all these stop losses that were placed right here all got taken out right at the open, and the stock started to come back right away. So don't be scared of that stock, guys. You should be looking to enter the stock because now that all these stop losses have been cleared, now this would be a very, very logical stop loss. That 27.20 area, this would be a great stop loss area right here. So assuming that you're buying on the way up here, which is what we did on Friday. So we entered the stock here on 27.70. That was where I issued the alert to my subscribers to be long NOG at 27.70. Stop loss around that 27.20, 27 area right underneath this low right here. So you have a very clear entry around on this reversal, and even more clear stop loss once on this right under this candle on the day's lows right off the open. But you can see, guys, 27.70. I called it on the chat room as well too. This was a very, very difficult stock to catch right at 27.70. But I did not want to, any of my members to be chasing the stock. So I would have hated to see people buying at $28 or 27.70 or 27.90. I was hoping to get people around the 27.70 area. So 27.70, 27.75. 27.80 would have been just fine as well too. But I don't want to see people starting to chase this thing as the stock kept ramping higher. So right away I sent an email to my subscribers telling them, hey guys, make sure they use limit orders. So use limit orders. So I said, if you missed the alert prices, no problem. Just use limit orders. The market is so volatile, will be extremely volatile today. So chances are you will get picked up at the alert price. So no, I do not. When somebody misses an alert, you do not want to be chasing a price. You want to just wait a little bit. Especially in a volatile market, because what happens is the stock will shoot up. Test some kind of a resistance level and then come back right down again. As you can tell, guys, the stock shot up to 28.16 after our entry right here, came back lower, and look at that, it tested a 27.68 level. So anybody, if you had a limit order at 27.70, chances are you would have got picked up right around right here. And as you can see, what happened at 27.70, guys, is I talked about this in my previous video as well too. You can see here, guys, we have a higher low right here. So you have a low right here at 27.25. Stock shot up right away, came back down. Limit orders right here got taken out. So now you're officially long the stock at 27.70. Now you have a higher low. So this is perfect. This is exactly what you want to see right now. And as the stock kept climbing, it kept ramping. The market started to bounce a little bit, but this was much, much stronger than the market, because the market kept testing lower levels, intraday, but this one just kept shooting higher and higher and higher. And basically and then I issued the sell alert as we approach this level right here, because this was a level of resistance around that 28.80 area. So I shot off an email alert to my subscribers telling them to sell NOG, for it was a good quick $1 gain. So if you put in your limit order here, which is what I told people to do here in this email, right after I sent the NOG and the CLF alert, I realized the prices shot up right away, but I told people to please use limit orders. Do not chase these stocks. And as you can tell, got picked up right here, 27.70. The stock shot up quickly. to around that 28.80, 28.70 area, which is where we sold it right around here, right here. So it was good. The stock was a quick entry. The trade lasted literally maybe about 2 hours, maybe an hour and a half. You made a quick 3.5%, 3.6% gain on it. Take the gain. I took the gain here. I issued a sell alert here, called it out in the chat room as well to sell it here. But many members decided to hold it. And some of them sold it, up in the 29, in the mid 29 areas, so right around right here. So this was a nice little trade. Anybody that took it, they got a nice little gain from this one. And here's another one that we did also on the same principle as the NOG trade. It was CLF. This is a trade that I was watching in the morning as well too. As you can see, guys, this stock, it has a history of bouncing between the Bollinger Bands, and this is what I was watching for. Bollinger Bands is not something I use very often, but every now and then, if I want to see if a stock is getting oversold, I like to pull up a Bollinger Band just to see, where the stock is in relation to its Bollinger Bands, to the extremes, to the extreme of the bands. And as you can see here, the stock clearly broke below the 50-day moving average. This red line is the 50-day moving average. So CLF broke below the 50-day on Thursday. So right away, you knew that a lot of people who were long the stock for a while obviously sold it on a break of the 50-day moving average. And as you can see here, there was a big pickup in volume as the stock sold. So as you can see, maybe this could be considered like a mini capitulation day. On a break of the 50-day, a lot of people sold this stock. People maybe have been holding it the whole time here, or maybe somebody who bought here, maybe chances are they sold on the break of the 50. But look at this, guys. It tested the Bollinger Band. It broke below the Bollinger Band, so it overshot right here. It gapped lower on Friday. So same principle as we did with the NOG trade. We had an overshoot below a trend line, or below a moving average, or below the Bollinger Band. So I kind of like these overshoot trades, because a lot of people, maybe it might suck in more shorts. It might maybe longs who were looking at it maybe gave up on the stock. So I kind of like when a stock overshoots a trend line, when a stock overshoots a Bollinger Band, when a stock overshoots a moving average, because that creates all sorts of things. Now in the stock, it creates maybe longs who are getting paranoid, they don't want to get under the stock, or they sell it, or shorts who are eager to see a break of the 50-day or a break of a trend line. They get eager and they start shorting the stock, which makes it vulnerable for a short squeeze. So this is all like this. You have to kind of like think like a contrarian a little bit. You have to think. As the market's getting oversold and we're likely to bounce. Which stocks have the most opportunity to squeeze short, or which stocks have the most opportunity to surprise longs. Which one. What I mean. So this is what you need to be doing. In your thought process when you're seeing a market approaching a level which is very interesting. So basically, once again, here we entered the stock here right away at 80, 85.40. That was my entry. Send the order to my subscribers at 84.40 to get long. Stop loss around right here around the 84, 80. I actually put the stop loss at $83. So we entered at 84, 85.40. Stop loss at 83. I wanted to give it like a $2 stop loss, just to make up for the volatility in the market. If you want to be an aggressive, maybe very, very short-term trader, you could have entered at 85.40 and put a stop loss at 84 here. That would have been just fine as well too. But you can see what happened, guys. Right away, the stock shot up. Literally, nobody really had a chance to catch this alert unless you read this email, which I sent out shortly after I sent out the CLF and the NOG alert. Guys, please use limit orders. You don't want to be chasing these stocks. So basically, if you use the limit order, you would have sat through this. You would have seen the stock shoot up like that. Chances are you would have been you wouldn't have been very happy to see a stock shoot up like that without you, unless you bought right here. Anybody in the chat room, guys in the chat room, are always the quickest ones to react to my alerts, because they're sitting right there. They're not waiting for an email to hit their inbox. The guys in the chat room, they're sitting there and they're ready to put on trades. So anybody who sitting in the chat room probably got around 85.50, 85.60, which would have been a reasonable entry right here. So as you can see, it shot up, but once again, use limit orders, and the stock came right back down went through the alert price, and I was actually very excited to see that. I was very excited to see the stock go through the alert price because I knew anybody who read my email to put on the limit orders, you are gonna be entering this stock at this level, which is exactly what I wanted people to enter. And as you can see, guys, we have another higher low right here. So let me just show this real quick. So as you can see, we entered right here at 84, 85.40. Stock shot up. Never gave a chance to enter unless you were in a chat room watching the stock very closely with me. Shot up right here. If you were following my emails, you would have entered on a limit order right here. I was so happy to see the stock go through my limit order because I knew people who put on limit orders were going to be picked up right here. And as you can see, the stock started to shoot up right back up again. And this is where so the stock kept ramping, nicely. My target was around the 88 area because you can see, guys, this was our level of resistance right here on the 88 area. So that was my initial target. So anybody in the chat room or in the emails, when they got my email to that, I had an 88 target on it. So boom, you would have exited right here. I opted to go I opted to go by raising stop losses. So I kept emailing and then subscribers to raise their stop losses. And finally, my final raise stop loss email was to raise a stop loss at 87. So you entered at 85.40. You watch the stock ramp higher here, and you would have got stopped out here at 87. Which was good for about a 2.5% gain. Not bad. Maybe like a 2% gain, something like that. Maybe a dollar, a dollar 50, dollar 70. Trade. Not bad. For on a day where the market was trading lower. You made two long trades. One was good for 3.5%. One was good for almost 2% gain. A dollar 50, a dollar 60, dollar 70 gain, whatever it is. And as you can see, guys, the stock, came back lower, went through the stop loss, here, and then continued to ramp higher. But these are the trades I love to take. I love to take trades that overshoot a support line, like an obvious support line. Just because a stock breaks the 50-day moving average or breaks a trend line does not mean that the stock is done. Be careful. There's a lot of games that are being played out there. With the breaking of moving averages and trend lines. You always want to keep an open mind, and keep in the back of your mind that a stock can overshoot and it also can rebound very quickly. So stocks that overshoots a trend line on the upside or the downside, whatever it is, these stocks, they can come back very, very quickly. So you want to use those to your advantage. You don't want to be scared of situations like that. You want to have an open mind. And say, what if? What if the market bounces? Would these stocks be good entry points? The fact that all these stop losses got taken out, does this now make a good stop loss right here? There's a break below a moving average, and a stop losses that get taken out. Now, if I enter here, would this make a good stop loss right here? My answer is yes. These were all obvious stop losses that got taken out here on NOG. Now the stock overshoots, takes out all the stop losses, reverses. You enter on a reversal, put a stop loss right here. That's a good trade in my book. Anyway, guys, I hope these videos help, and I promise we'll do more videos in the future. And good luck tomorrow. Best of luck. Bye bye.